All right. Hello, everybody. Dan Fitzpatrick here, stockmarketmentor.com on Friday the 6th. So, what are we going to do with Amazon here? The market is really, really rocking. There's just so many stocks that are moving higher that sometimes it's kind of hard. Things get kind of lost between the noise, the signal, the noise. Which time frame do I look at? Things like that. And it can cause you to either miss the trades that you should have been in or get in the trades that you really shouldn't be in. And that's kind of one of the biggest conundrums in trading is gosh, what a beautiful looking chart. Well, yeah, beautiful for the guy who bought it last week or last month. Now, not so much. So let's take a look at Amazon and see if we can make sense out of this. So you can see how this is just a zigzag away here, up and down and up and down. And if we just, you're going to see a whole bunch of squiggly lines here in just a second. Okay. So if we just kind of look at the fact, you know what, I'm going to get rid of all this crap. Watch, just like that. Except for this. This line here was on the Wednesday after the election, which is when so many stocks jump. I always like to keep this in place, and I'll do it for a while, not to revel or cry about the election, whatever. It's just like to give me a benchmark as far as what has the stock market. We'll look at this, for example, like what has the stock market done since that time, or what's a stock done since that time? That's why you have this here. So I'm kind of way off the beaten path, and so I want to get back to it. So we see this big, massive sell-off here. That's the yen carry trade when they stopped carrying the yen up and down and up and down and up and down and up. So now this really looks like, okay, it's moving higher, but it's way higher than a good entry point. And so maybe we just kind of shy away from this and say, well, we missed the trade on Amazon. Screw it. Let's go find something else. That's not the way I want to trade. I want to look at this stock and see that this is a monstrous stock. You know what they do? You probably don't know everything that they do. These guys have their hands in everything. But if I look at the weekly chart, I get a much better sense of what's happening here. On the weekly chart, this is what we have. We've got a nice kind of an inverted head and shoulders. I'll let you pick out the shoulders. This is the head right here. But what I'm really looking at is this here, this level between 200, which is where this last peak was in the middle of the year, and then down here, I'm going to call it 150. And do you know why? Because that's really, really simple math. And on a Friday afternoon, don't have any cocktails in me yet, but still, I like to have easy math, easy numbers. So I look at measured moves this way. I don't really use Fibonacci. Some people that I know do. For me, I just look at layers. I look at levels. And so I see this channel here that was created after this high, that high, and then it pulls back. We're looking for a bottom, and now we've got one right here. So there's a $50 difference between where the high was and then ultimately where the low was. Now, some of you may be looking at this and saying, well, it wasn't quite down at 150. It was like a 152 or 150, something like that. I'll just say this, don't major in the minors on this, because markets don't trade that precisely. Every once in a while, you'll see something just go dead balls on 200, 100, stuff like that. But even with Bitcoin, when it hit 100,000 a week or two ago, whenever the first one was, it wasn't 100. It bumped just a little bit above that before it came down. So the point that I'm making here for my move here, all I want to do is just look at the difference. It's a $50 difference. And now I'm looking for a breakout. Oh, okay, there's my breakout. And I'm deciding, do I want to take this trade? Remember, this is a weekly chart. Do I want to take this trade? Well, the first thing I got to ask myself is, okay, how much money do I expect to make on the trade. And I want to measure that technically. I want to have a sense, whether you're using Fibonacci, Elliott wave, or flipping a coin, you should not be in a trade before you can actually look at the chart and say, okay, I expect the stock to go up to this number, and this is why. It's the why that keeps you from just doing the hope strategy. You got to be able to explain why you think the stock can go up to a certain level. And I could teach a 1 hour course on that, on just which levels, how you do it, what are your indicators, all that kind of stuff. But this is not going to be that course. The bottom line is, though, I just want to know what my potential reward is. And then from there, now I can back out and say, all right, so how much am I willing to risk? Where's my stop going to be? What's my position size? That type thing. And so as I look at Amazon, when it breaks out here, I'm looking at 200, 150. That's $50. I want to slap the $50 on top of the 200. And this is where my target is, right here at $250 damn dollars. That's what I'm looking for, right up there. And so that's how you make this kind of trade. So you're taking the trade here, and then where's the stock going? You see how it kind of farts around there a little bit. Once it breaks out, it's typically going to come back. Not always. You'll typically come back to see the test. That's when you really, really need to watch it. There's so many people. I've been this guy a lot over the years. There's so many people that you look at a breakout and you want to take the breakout. So you buy the breakout, and then the stock pulls back and it shakes you out. Breakout, shake out, walk out. It shakes you out and you say, okay, well, forget this. I'm going to move on. And what you want to be doing instead is you want to be watching the stock and seeing if you get kind of a second bite at the apple, because you got to remember, institutions are what causes stocks to move. And so their buying can push a stock up above a breakout level, but it's not like they all get on the horn in the morning and all decide that they're going to buy. Some are going to be selling. Maybe there's retail in there someplace, one way or another. But in any event, you're going to get a push higher after a breakout. It'll push higher. And then you say, well, what's happening next? And it's the next that tells you what's really going on with the chart. So here you get 2 down weeks here, didn't even come back to test the 50-day or the 10-week moving average before moving higher. So as I look at this, I'm looking at volume, a little bit above average. That's good. Volume's good. Breakout here. So I'm looking at this to give me, another 10%, not a big deal, but I'll take that over 2%. So I'm looking for another 10% to the upside to about 250. And that would be my natural level of resistance. And then where would my stop be? I'll tell you, I'm not going to use the weekly chart really for this. I could say, all right, well, it's 8% here. So I'm looking at 10% on the upside, 8% on the downside, using just this last bar as the low end of the range. In other words, 209.51 is the low. So 209.50 is my stop. You can do that. But instead, what I like to do is I use the weekly chart for a frame of reference. Like, what am I doing here? Am I getting long? Am I not getting long? What are the institutions doing? And I can see those on the weekly chart. Then I go to the daily chart and say, all right, now what's my risk going to be? And on something like this, I would actually use the 8-day exponential moving average, not as a perfect indicator, but it tends to work pretty well on stocks that have some momentum. So here, I would look at the 8-day EMA at 215.50. We'll call it 215. So now I can look at where the stock is now, drop it down here, maybe 214. 213, something like that. And now I've got a risk of less than 6%. And if the stock falls back and I get stopped out, well, then this wasn't a trade that I wanted to be in anyway. If it doesn't fall back and stop me out, well, guess what that means? That means that this is a trade that I've wanted to be in. So anyway, I hope this kind of frames your your analysis. I think it's a really, really important concept to have in mind. And if you can do that, I promise you, you're going to trade better. Now, I want to talk to you about one other thing. Okay, I want you to go to Crypto 101K. It's interesting. Bitcoin hit 101,000 today, and it's still going. And this is why, because my buddy Scott McGregor is teaching this class, Crypto 101K. We started talking about this, me and Scott, I don't know, like a couple months ago, about 2 months ago. And he was saying how it's really difficult for him to see so many people that were having issues with their crypto. They didn't really understand things. They're just looking at charts. They're getting shaken out. They're getting discouraged. Some people are making a crap load of money and others aren't. And so he feels like I got to just really take some time and explain the whole crypto space to people beyond Bitcoin. Although Bitcoin is, I'm a Bitcoiner. I'm kind of big in that and happy that I am. But so what Scott did was he put this course together. It was originally going to be like maybe a 2-hour interview where I play the dummy and I'm interviewing Scott and he's going to talk to me and walk me through my questions. But he reached out to me just last week and he goes, Dan, I'm off the reservation. I've been working all day, all weekend trying to put this thing together. I'm going to go ahead and stop sharing. So now you can see me. So Scott puts this course together and it's just a monster course. And it's not really me doing much of anything. I'm just there. I'm listening to him. But for the most part, it's just Scott talking crypto. Now, this is it's going to be a real simple course for you to get into. I'm going to show you exactly how to do it. So you go to this website, Crypto 101K. Now, you're going to see this pop up. I didn't build this page. I think it's a really good sales page. So I've not got no complaints there. But I don't know about you, but sometimes I don't like to give my phone number out just to get some information. It just seems a little invasive to me. So I get that if that's your issue. By the way, if you put in your phone number, we're not going to do anything with it. I'm not going to call you. But so what you can do is just put in your name, put in your email address, and then this is your phone number, like all 8s. And so you don't have to give me your phone number to get to step 2. And step 2 is this: $297 for a half an hour, for a half a day course. It'll be about 5.5 hours with Q&A. You'll have all the time in the world to ask Scott whatever questions you want. We're certainly going to look at charts. We're going to look at Bitcoin. But what I tell people, and we've got a boatload of people signing up for this class, what I tell people is that at the end of this course, you're going to be able to make a decision about whether the crypto market, and more specifically, at least to me, the old fart that I am, the Bitcoin market is for you. You're going to have enough information to make that decision. And this is one thing I can pretty much bet any amount of money. If you're sitting there going like, I wish you'd stop talking about crypto. I'm tired of it. It's a fraud and this and that and the other thing. I think there's 100% guarantee that you're not into Bitcoin, that you don't own any Bitcoin. Because if you are into Bitcoin, you're going to be going like, yeah, I want to learn more. I want to learn more. So anyway, I could go on and on, but the good news for you and for me is that I won't. I want you to get in here and sign up for this. Like I said, we've got a ton of people coming in. If this was actually a live event, like with seats and muffins and coffee in the back, I would say we're sold out. But since it's online, we're not sold out. We're not going to sell out. There's plenty of room for you. Okay, so I want you to get over there and do that right now.